Hey family, Dad here. Hope you're having a great day. On this video, just wanted to talk about some mortgages. Let's talk about this. Now, when you go and get your house for the first time, obviously you need to get a mortgage. You go to the bank, how much you can afford when it comes to a mortgage and the payments. One thing I will say from my experience in buying two houses is don't fall for the sales pitch. Just because a bank says this is how much you can afford, don't take advantage of it and use that whole amount. The banks are in the market to sell you the highest amount. It's sales. Realistically, get a mortgage that you're approved for and go way lower than what the bank says you can afford. My experience is if you purchase a home, project on the mortgage, that's going to be significantly lower than what the bank says you can afford or what they will approve you for. At least half of what the bank says that you can afford. You always want to have a safe cushion because at the end of the day is not only will you have unexpected expenses associated with the home, you're going to have to pay for taxes, property taxes on the house, you're going to have to pay homeowners insurance on the house. And then there's going to be all other things associated with the home as well, as far as repairs, things like that, the way you want to furnish your home. So be very, very mindful when getting approved for a mortgage. Don't assume just because what the bank says that they think you can afford, mean you can afford it. Go at least half of what the bank says you can afford. And I'll share a little thing here with as well. I pulled up this one website on nerdwallet.com and let's do a little deeper dive on that. So I'll leave the link down in the comment section of this video, but I was looking at this, just mortgage calculator, how much can I borrow? It goes down here where you can they share general rules of thumb of how much of a mortgage or how much of a house you can afford. Obviously there's certain parameters and guidelines that you want to abide by. There's differences between a 30-year fixed loan, 15-year fixed loan, ARMs. But how much money do I need to buy a house? Obviously a rule of thumb is for experienced homeowners is 20% down, but I think there's a lot of lenders out there that are being more flexible, as you can see on this website on NerdWallet, that minimum down payment is 3% for some of these banks. But one thing you always want to do is kind of shop around with different banks and see what kind of rates you can get. Obviously, credit score is going to play a significant role in this. The better credit score you have, better chances you're going to have a better interest rate on this. But as we scroll down here, just kind of what mortgage can I afford? They're going to run a lot of scenarios for you. They're going to run how much they're going to allow you to borrow from the bank. It looks like, with this website at NerdWallet, consider the 28% rule. A mortgage payment shouldn't be more than 28% of your pre-tax monthly income. I've seen some that say, 25% of your net paychecks would be 25%. And then I've seen some of them that are 33% of your pre-tax monthly income. My rule of thumb is, cheaper the better. And I'm more on the side of 25% of your net income per month is what you can afford. So let's just say hypothetically you make $10,000 a month after taxes and whatnot. Biggest the mortgage payment that you could afford is probably about $2,500 a month. And that doesn't even include property taxes and homeowners insurance. So you can tack on probably at least another, maybe a couple $100 on that. For me, I pay roughly about $600 a month in homeowners insurance and property taxes. Especially the last year, my property taxes shot up a lot. And I think that goes for a lot of people that are homeowners, where their property taxes went up and their mortgage payment went up, because we typically bundle our property taxes and our homeowners insurance within our mortgage payment. Side on the caution of, how much you can afford. Like I said, for me, what works best is rule of thumb is 25% of your net income is what you can afford for a mortgage. There's also several other factors, I should say, that the bank would consider on how much they can loan you. They also, really look at debt to income ratio, what your current debts look like, what kind of credit card debt you have, if you have child support, all that good stuff. Credit score plays a huge role as well. So be very mindful. If you have bad credit, they're probably not going to lend you as much, and they'll probably charge you a higher interest rate. The better credit you have, the bank will probably loan you more money and probably give you a better interest rate. But again, as I said before, probably go very, very low. Just because a bank says they'll give you this amount, let's just say $500,000 for a mortgage, doesn't mean you should use all that. You know, my rule of thumb is use at least half, $250,000. Gives you a lot of cushion for those unexpected expenses. Expenses associated with the house, like utilities, gas, water, become expected when you become a homeowner. So as we scroll up here, I'll just put in my I guess, general information and see NerdWallet thinks that I would be able to qualify for as far as a mortgage. So I'll put my annual household income there, additional non-wage income, so I don't have child support, social security. I'll just leave the terms, 30-year mortgage, 6.5 interest rate. It looks like that's already pre-populated. Do you know your household total monthly recurring debt payments? So I'll put about $2,500 per month. That's roughly, you know, my grocery bill, you know, all the other expenses associated outside of my home, gas, credit cards, food, utilities, subscriptions, phone bill, all that good stuff is roughly about $2,500. Could be a little higher, but I'll put it $2,500. I'll leave property taxes about the same. Actually, you know what? Let me change that. Let me just do about $450 a month. On that. Homeowners insurance, I'll just leave it at $80. As you can see, once I fill all that out, NerdWallet recommends that you apply for a mortgage no larger than $961,000. My mortgage payment would be $2,670. I wouldn't even consider an almost $1 million mortgage. That's ridiculous in my mind. Still, they're saying, you know, a lender who might value me because I have great credit, you know, I have a pretty decent income and I have low debt. Usually I pay my credit cards off every month, and they're saying, you know, I could qualify for 1.36 million, and that mortgage payment would be roughly about $37.78 per month. And then mind you, that doesn't include homeowners insurance and as well as property taxes if you bundle your payments every month. So as you can see here, you know, they're gonna pitch you and they're gonna sell you as much money as they can get. Avoid that. Go significantly less than what the bank thinks you can afford. Again, the bank's in the business to sell you as much money as they can to you. And so be very, very mindful of that. Do a lot of calculations and just understand what you could truly afford after all these other expenses that come associated with the house. And outside of the house, with what you kind of buy for food every month, all that good stuff. You definitely want to keep mindful and track that as well. So tell me your thoughts. You know, what is your mortgage payment? Have you recently applied for a mortgage? What did they say? What did the bank say? Comment, like, subscribe. I would definitely appreciate it. So that's all I got. Have a great day.